What's going on, folks? Welcome back to the channel. It's your boy Rebalance with another weekly review and outlook for you. This is not financial advice, just a reminder. This is educational and entertainment. Just going to be my perspective from the things that I've learned and my experience with these markets. As always, as well, let's keep in mind that before you can achieve anything, you have to first believe. And that is why hashtag BTA is so special to me, because without the belief that I have in myself, I don't think that it would be possible for me to actually achieve things that I'm striving for. In today's video, I do have a bonus for you, and it's basically going to be revolving around the fact that knowledge doesn't depreciate and that many skills are actually transferable. If you're seeing my screen though, should be seeing the economic calendar with that first date up there as Sunday, March 26th, which was the beginning of this past trading week, which just ended a couple of hours ago. Just taking a peek at it, right? We see that there was no news for the USD on Monday, but we did have news on Tuesday, Wednesday, Thursday, and Friday. And scrolling down, because I don't think there was anything of any particular importance given, especially the way that the charts moved. But scrolling down to now show next week to what we have on the horizon. Once again, Sunday, no news. Monday, there is USD news. Tuesday, USD news. Wednesday, USD news. Thursday and Friday. So every single day, there's medium high impact news on the US dollar. Next week, as well as it being non-farm payroll week, and see all these gray folders indicating a lot of bank holidays across the world. So the foreign exchange markets, it will be interesting to kind of see how those trade next week, given the fact that there's plenty of bank holidays as well as non-farm payroll here in the United States. And yeah, let's get to the charts. So first and foremost, here I have the dollar index chart up. And from my last video, which was the outlook for this week with the review of that previous week, was looking to see if dollar had any willingness to continue higher, seeing that on Friday, well, it started off on Thursday last week, but finished up on Friday, that correction higher from all of the drop that it was doing. But as you can see, coming into this week, open up with a gap lower, pretty much worked that opening price early Monday until at 9 a.m. Eastern, we started to drift lower. In my eyes, right, what I was really seeing was trading towards this inefficiency here. I wanted to see how I responded there. We closed. Let me just confirm, right, to make sure it didn't get there. So yeah, we closed just above on Monday's trading session, open up with a gap going into Tuesday that pretty much, even right with the continuation lower, we traded below that inefficiency, as you can see here. So pretty much violated, in my opinion. Whenever I see a session opening or a week opening and it violates an area that I was anticipating acting as support or resistance, that pretty much deads that zone to me or inverts it. And in this particular case, it inverted it. So if you pay attention to these two lines I just added that say BISI over here on the right, and let me go full screen so that we can see a little bit more. You see how it traded below, and this is that lower line, right? Pretty much works that as well as that opening gap that was created between Monday and Tuesday. So it's working that level just consolidating, basically staying below that, never reaches the midpoint of it. And then eventually we end up, right, opening up with a gap lower again. So this opened up with a gap higher. I don't have that marked up because obviously, as you can see, it wasn't of much significance. Not as much as this was the gap between Wednesday going into Thursday's trade-in. Uh, we gap lower, traded higher, retested that gap between Monday and Tuesday once more, traded lower, and then in London session, we got one more push higher, basically retesting this gap opening here and that lower end, right, of that inefficiency that it pretty much inverted. Then we trade lower, we take out all the sell side here, go into a consolidation again. We do get another gap opening, but again, nothing that was too significant except for just looking across over here to the right. We pretty much retest that area twice here on Friday and use that pretty much to have a relatively bullish day to end the week that was mostly bearish and consolidating, right? And so looking at the daily chart, this is kind of what it looks like. So now my attention, as opposed to my attention right after this closed, leaving this area down here untapped into, potentially I wanted to see it trade up into here. I recall saying that in my last video. Don't quite get that. We actually stayed within, right, Friday's candle on Monday. Then we got that gap opening right between Monday and Tuesday, which violated and inverted the hourly inefficiency. And then again on Wednesday, and let me just confirm that by putting a little line here. So no, we didn't get an inside day, but we did trade above Tuesday's high and we rejected, close below it. Then again on Thursday, right, we traded once again above Tuesday's high, one more rejection. Now we're in, right, the range of this wick here. So obviously I'm looking at that midpoint of that. So I'll just go ahead and denote that. And look at how the bodies of the candle ultimately respect that. Although you do see some coloring outside of the line, this wouldn't, to me, indicate any sort of momentum lower, especially also considering that here on Friday, we traded below Thursday's low and we could not sustain below that low. So we ended up rejecting higher and closing, like I showed you just now on the hourly chart, bullish, right? And so what I want to do now is pretty much just open it up to, now you can see the way that I'm typically looking at it, where I have two time frames up, seeing them side by side, just because of the fact that it's more beneficial, in my opinion, to be able to see a little bit more of what's going on a higher time frame, and then having a lower time frame to utilize for identifying setups and potential, areas of concern that would pretty much steer the higher time frame chart in one direction or the other. You kind of got the higher time frame is going to be king, but the lower time frame always happens first before the higher time frame can get to where it's going, just based on the fact that it takes more time to actually fully print a higher time frame candle, right? For example, a daily candle, we need a whole 24 hours essentially for that to print, as opposed to an hour candle, we just need 60 minutes, right? So I can get a lot more details from the smaller time frame than I can from a higher time frame. And that just goes all the way across the board from the monthly and up, all the way down to the minute and below. But so now that's the dollar chart there. Want to now go into NASDAQ, which is what I had primarily focused on in my outlook for this week. And so what we see here in NASDAQ here on the left side on the hourly chart, this yellow line is the opening price. And I recall I was using the daily and hourly for my outlook, and this is Monday's opening here. I was saying that Wednesday's low and Wednesday's high were going to be significant to me because of the fact that Thursday and Friday traded within that range. also the fact that Wednesday was the federal funds rate decision being made, and we saw relatively um strong market still. Didn't show too much weakness, although Wednesday itself, after trading higher, rejected aggressively lower. Just given the fact, like I said, that we pretty much stayed in the consolidation here, and we didn't take out Wednesday's low on Thursday and Friday like we did on SPX and US 30. I was anticipating higher prices still on NASDAQ, right? And I was saying if it wants to get a little bit crazy, this daily high up here could be a target. And as you can see with this bold up close candle, we pushed through that high. So target acquired, or target reached, acquired and then reached, right? But my markups are a little bit different as well. If you notice from the last video to this video, I mentioned before, I'm always upgrading, always leveling up, new information, new perspectives, things like that. I'm always going to take those things into consideration and try to apply them immediately because time is of the essence. But just really paying attention to Wednesday and the reactions of price at the levels that I've mentioned, right? That high and that low of Wednesday. So looking over here on the left, we see how we open up, basically consolidated, right? But this drop right here essentially trades into this inefficiency here. And now US 30 and SPX also has similar situations where they traded into an inefficiency, but they ultimately were more respectful of said inefficiency. And just to show you visually, right, let's go ahead and just mark this up. Look at how basically we get respect of it short term, right? Trades higher. This is like in a New York session. So London session trades down into it. We bounce going into New York. We don't make a new high. We start to trade lower again. We're playing with that level once again. We do take out this high. And then at 10 o'clock here, we close below it. Once we close below it, next candle, we get a retest. We drop lower, make this swing low. One more retest up in there, right? But look at the time of day. It's already 3 p.m. So the session is closing. We trade lower and we consolidate into London. London session, we take out this low, right? Start to consolidate again. Going into New York, we had news at 10 a.m. on New York. This is that 10. Well, no, this is the 9 a.m. candle. So before the news, we drop down into this daily. I believe it's a daily. It could be. Oh, actually, no. Look over to the right. So it's a weekly. You see that W there. So this was a weekly volume imbalance. Basically, the difference between where Friday, which is this green candle right here, was a Friday. This candle closed down here. It's a down close candle. And then on the new week opening up, which is basically this Monday candle, we opened all the way up here. So that range in there is this yellow rectangle. And that's what we dropped into, as well as Wednesday's low. Now I have it marked up as Fed funds rate low from Wednesday, March 22nd. So we trade below that on Tuesday, which for me is ideal for the market to make the high or the low of the week on Tuesday. And so it trades down there and it starts to correct, right? But look closely. This up close candle is within the range of this down close candle. So not really any too strong of an indication of bullishness until it gets above this high here and ultimately see how it responds in this inefficiency. And so let me just also mark that up and drag that across so that you can see what it is that I'm talking about. But you see how inside candle, one more time lower, take out that low. Essentially, we trade below that weekly, right, volume imbalance, but this is the hourly chart. We're talking about a weekly level, and we have one hourly close below it. Immediately, we get that same situation here where we are aggressively correct, but we have an inside candle. Next candle trades higher. We get another push. We actually take out this high. Now we're in the range of this inefficiency that could have easily offered us more resistance. But we're again, look at the time of day, 3 p.m. session's about to close, right? So we get that last hour, 4 p.m., right? We end up closing inside. We open up with a gap lower for Tuesday's trading, get a doji print on that candle, that first hourly candle. And then that very next one, we close above this inefficiency. So this was the first indication on the hourly chart that, okay, now possibly we've traded below Wednesday's low, which was an area of interest for me. We did not show any willingness to continue lower. We had already utilized this inefficiency last week, right? And pretty much kept NASDAQ relatively bullish, but at the end of the day, this was all just moving sideways, really, when you look at it now. But once we got down there, traded above this inefficiency, we created another inefficiency in those next two candles as we traded higher prior to taking out this high. We trade into that inefficiency here, which is, again, this is like the Asia session. So really wouldn't be expecting too much from the Asia session or that immediate New York opening price at midnight. But sometimes when the market has somewhere to go, and if you look at your own charts around this time of day, you'll see that US 30 and SPX were actually relatively bullish. They did not share this drop with NASDAQ. NASDAQ was solo dolo making this move lower, but it was the only one last week that had not taken out Wednesday's low, which again was why I was looking at it as an area of significance. So once we traded below that, and pretty much we had a shift and order flow from bearish to bullish, right? Going into that London session, we did finally trade above a couple areas of buy side. And we had already utilized this area as resistance. But if I stretch it across, look at how it like worked it in a sense. Like I like to call it like that. Trade above it, trade back below it, trade back above it. You see at the end of the day, though, we're playing at the weekly opening price, right? Look at the time of day. This is like going into London close. Then we get into the post lunch hour, going to that PM session, right? We trade higher. We take out the buy side. We've made it now a new high of the week by Wednesday. Correction here. Very tight, choppy correction though, which is typical of Asian session. Then going into that right midnight open and London, another push. We take out the buy side here. And then we finally trade above what was February's high. So we're in March now. We trade above February's high, but we also trade above that Wednesday high from last week, which itself got very close to that February high, but couldn't do it, for rejected, and then ultimately created this range that price traded in inside of until Tuesday, right? Saw us finally dip below it at the opening of that consumer confidence data. So then pretty much from there, as you can see, we were just parabolic, right? Never really had any significant retracements. We were pretty much bullish for hours here before we actually got a retracement at London close going into, the PM session. Look at this inefficiency here, right? Look closely. Got an inefficiency here that ultimately traded down into going into that PM session. Rally off of that into the close above, right, that February high, open with a gap lower. This is a slight little inefficiency here. Look at the body of the candle, right? Pretty much respects this inefficiency. We get another move higher above that February high. That next candle was very aggressive. Look at the time of day. This is Asia, not very typical, but it did leave a little inefficiency. Whenever I see a key level traded above or below with enough of aggressiveness to leave an inefficiency, that kind of, in my mind, shows me the willingness to get even further higher than that. And with there being reason for it to get up there, in the sense that we had left relatively equal highs here going into that midnight open, and we're drifting lower, right? London trading lower, but very choppy, right? Small range. We take out this low here, right here, but look at the bodies of the candle, still pretty much within the range here is still where we're seeing this candle respect. And then after that, going into right Friday, which was this morning, we trade from down here after taking out that sell side. We take out the relatively equal highs, we retest them, we push up to that old daily high, which you can see all the way over here. And then the last couple hours of the day, we just continued to push higher because there were most likely people that were selling short at this level, especially once they saw it wick off and then his next candle trade lowered like that. And they pretty much just punished them to end the week. So, like I said before, targets reached. On NASDAQ, it just was a relatively difficult situation to navigate because of the fact that there was no symmetry in the markets. So US 30 and SPX, like I said, did not share this drop that NASDAQ did. And so there was potential for confusion if those were being utilized, which I believe they should for intra-market analysis purposes, but potentially confusion as far as if NASDAQ was going to catch up to them and start trading higher, or if they would eventually turn around and also reach lower. But just thinking back on last week, right, they had already taken out Wednesday's low twice. They did it on Thursday, and then on Thursday, well, then on Friday, they took out Thursday's low. So they traded lower twice, right? As opposed to you see on NASDAQ, it did not take out that Wednesday low until this week, Tuesday. But now getting into an outlook for next week, right? So with this being so bullish already, and I want to just make note of the fact that this Friday, today was March 31st, the last day of the month, meaning that the next trading day, which will be, I mean, the market opens up on Sunday, which will be the 2nd of April, but technically, the 3rd of April, that Monday, is going to be like the first trading day, right? The daily candle will show that Monday as the first day. And so from that perspective, I'm looking at it in that sense. So I have to now go to the monthly chart to really be able to effectively give an analysis. And then I'll go to the daily chart here. I will say that relatively soft bias though, nothing where it's going to be, I believe it's high probability. We've traded above an old monthly high. Actually, well, two, right? Because this was the month of September 2022. So we traded above that high now. These two up close candles here could offer some sort of resistance to the market. So I will be monitoring the midpoint of these two up close candles as you see over here on the left. And then if it can get above that midpoint, I'll then look to see if it wants to trade up to this high or possibly put a candle body inside of this volume imbalance up here from the daily chart. So a pretty like wide range as far as where it could reach up to another, potential 250 points or so. But again, that all definitely depends on the dollar's continued weakness. If the dollar starts to find strength after it trades lower into one of those levels that could act as support, then I would start to expect this to start to break lower, and we'll see how that goes. So that's what I'm saying. There's really no strong bias, in my opinion. Also, just take into account the midpoint of this wick on the monthly chart. So I will actually apply that. And that'll be a level that I'm also watching, so which happens to be above the other levels that I already mentioned. So if we get above these levels, then this would be the next place that I'm looking at. But let's just thicken that up a little bit like that. Actually, we'll go ahead and make it green like that. But yeah, so that is pretty much the only analysis I can offer for NASDAQ. Like I said, I pretty much explained everything that's in my mind that I'm thinking about it so far. So we'll just see how Sunday opens up. and how that news next week impacts the dollar chart as well as the indices, what type of price, moves that we get, what data we cannot collect in those 5 days of next week. It'll probably be like a very light risk, very few trades, if any, type of week for me, just lots of observation and allowing for more intel to be collected for a more high probability analysis going into, that second and that third week of April, to kind of get a feel for what that monthly candle is going to be looking like, right? But now getting everything back to as it was. So we'll put this back to the 60-minute and we'll put this back to the daily chart. And for that bonus that I mentioned, I'm going to bring up the gold chart and I will talk about that. So gold here, as you can see, right, with the daily dividers, opened up here on Sunday, traded aggressively lower, got a correction, lower again, higher low, higher again, taking out buy side here, lower for a correction, consolidation, one more time lower, sell side here, inefficiency here, runs higher, consolidates, takes out buy side, trades into this hourly inefficiency here, pretty much works this level. We get above it here. There was news this morning. Look at the body of the candle though, where it closed. Very choppy consolidation in here. And then we end up dropping lower to end the week. And that directly corresponds with the dollar chart rallying higher to end the week. We saw weakness in gold. And over here on the right side, you see the daily chart. The main levels I'm looking at, right? I got some weekly, daily, and monthly levels up here that I'm keeping my eye on. So we've already traded above this candle's high, and right, we closed lower to end the week. So the midpoint of this wick is of interest, as well as this rejection block, which is the closing price of this down closed candle. Those are going to be areas that I'm watching, as well as above this high and this monthly rejection block above here, which is from March 2022. So no hard bias either on gold. We're going to be very dependent on how it opens up on Sunday, as well as how does the dollar chart move going to really dictate, like I said, where I'm looking for the monthly candle of April on gold to really trade to. Lower would be something that I'd be interested in for that first 2 weeks. If I can see some sort of significant push higher on the dollar chart, I want to see potentially start making its way down here. But this level is also going to change after next week is done, trading. So we shall see, like I said, at the end of next week, really what my analysis is. For now, just was able to share with you a lot of my thoughts as well as the review from this past week to really get a feel for, just like I said, the way that I see things, the way that I'm doing things, and the growth that's, taking place on a day-to-day basis. But with that being said, and the reason, like I said, this was that bonus. Everything that I'm learning applies to every market. So although my reviews and obviously my reviews because the outlooks, but obviously my outlooks have been predominantly the U.S. stock index, U.S. stock indices. So moving forward, though, I will start adding in other assets. Possibly will be trading other assets. I realize that it's best for me to be what's called a swing trader, meaning taking long-term trades, utilizing the higher time frames and things like that. Like I'll still use a smaller time frame to really get a feel for order flow and where like a good entry and where I can establish my risk to keep it low, right? I'll use it for those purposes, but I'm realizing that what's best for me is to take longer term trades. I just have to develop the patience to stay in those longer term trades. But once I have the understanding and the experience that I need to be able to do that confidently, it'll be no issue at all, in my opinion. But yeah, so just real quick before I close up, like I was saying, that knowledge doesn't depreciate. So everything that I've been using to mark up the US stock indices can also be applied to gold, can also be applied to, something like GBP, JPY, GBP, USD, or any of the other foreign currencies, right? Because many skills in life are transferable. So something like analyzing a market, analyzing order flow, things like that is definitely transferable from one asset to the other. I just don't see much value in being scatterbrained about it and looking at too many things and then missing out, quote unquote, on opportunities because my attention span, right, is being stretched across so many assets. But the beauty of something like TradingView is they have this wonderful alert system that allows me to, for example, let's say I wanted to know when price got down to this level. You can see I can right click and I can add an alert. I can set the message, the name of it, change up the different settings and stuff like that. So that will allow me to be focused primarily on, one or two assets, but then have marked up and be anticipating certain things that happen in another one without me ever having to even like look at that chart on a day-to-day basis. I'll still get a notification like, hey, look, it got to this level. Now focus on it, right? You already kind of had some sort of idea what you may want to do once it gets there. So what the market looking like? What's the order flow like? What time of day is it? Is there any news that just came out? Is there any news that's about to come out? How's the dollar chart doing? Things like that, right? So it's a constant, if then, type of mindset about it. Very very demanding in terms of focus. And so with that being said, I'm going to end this video. Thanks for tuning in. Feel like you learned something, leave your boy a like, leave a comment if you got any, questions or concerns, and I'll catch you guys in the next one. Peace.